All right, let's go ahead and deep dive into this week, and let's go ahead and put a story together on what could possibly transpire throughout the week. Every single week, this is what you want to do. You want to come to the chart and basically determine if you're looking for price to go up or down. And then based off that, that's the building blocks to get everything else we need when it comes to your confluences and your bias. Let's get to it. So, looking at the weekly, we see it here, right? So we know automatically that at the end of the day, we're just looking to see how this candle here can end up, because this is the candle that's for this week. So you see, we're already at last week's low here, which I think we already took out. This low is 23,371.50 at 370. So yeah, we took out last week's low here. So we can go last week's low. There, bottom. And we can just go ahead and put last week's high here. Boom. So now we have last week's low and high. We already have that foundation. We already took out last week's low. So something that I see also within this is this long wick. Whenever I see long wicks like that, I always notate the midpoint of that to see where it's at. And maybe it can help us later on when if we get that expansion to the downside to determine if price is going to continue. So I can label that. Then I can go ahead and say weekly wick MP. Lock that. That is 309 even. Boom. So now that I have that, do I have anything else that I can use inside of this price action now? Well, we see where we had this expansion up. We had this down close candle, price pushed up. Then price came back down, and price pushed up again, came back down. So we're kind of just in this general area. So with the weekly, that's all I see that I want to use. The one other thing that I may want to use at some point in time, maybe not this week, depending on how price action is, but it's this midpoint of this week here, which is going to be here, which is 23,683. So this can also be, so this is weekly wick swing high midpoint. So this is everything I have for the weekly that I would use. So go ahead and put this into a folder. Boom. So now that I have that, let's go down to a daily now. So now with the daily, we see that last week was pretty much all this consolidation besides that initial push up Friday, and then we had this consolidation back forth, kind of broke out of it and came back into it. So if I want to, I technically could look at this expansion and then this consolidation here on the daily as an area or confluence. And then seeing that we broke out of it, retested off of it, and we're pushing to the downside, this can be my potential push up to back up into that weekly high. So this is a possibility here. Looking at that. And then I see we had this inversion off of the daily from last week. This this imbalance is 804.50. This high is 803.75. So we haven't taken it out yet. So this could be that liquidity that we can push up into if we get above this daily consolidation. But if we continue to the downside of that, we can push down. But as we see right here, we have this floor right here as a BISI. So we have this here, followed by this inversion. Now, we have liquidity taken out here. You had this liquidity sweep right here. So I'll put that. We'll put dollar signs as liquidity. Boom. So we have that. We have this here. So we have this imbalance here. Make it a little bit. Here. There. Like that. Boom. So now we label this daily. Daily. And then daily. So now we have daily forming, liquidity there. We had this liquidity here. We'll just swept and ran. That high, it came from that high, take out this low. Now prices in this push up. And also for the way that I look at liquidity, then I will look from this swing low to that swing high as my dealing range. And we went and swept this low. So we're already in a deep discount. And either that price is going to continue for expansion to the downside, or we could look to go back into this daily consolidation and then look to the upside. So now that I have that, let's put all of this in a folder. I'm going to go daily, right? Let's go 4 hour. Just clean up what we see on a daily. So we see that we have, just like we said, we have that consolidation, push out of it, push back up into it, expansion up, push down, and then we have this consolidation here. So if I'm looking for price to continue back up, we can go back above this consolidation, bounce off of that, and then continue up. And then this will become an inversion for that continuation to the upside. And if price wants to go down, then we can look to bounce off of this consolidation, pushing down, pushing back up into it, failing to continue down. But if it makes the consolidation, pushes down, pushes up into it, if it pushes back down, then we can look at that failure to the downside to go back up above the consolidation. So still using it regardless of the fact. Just being able to see what's going on in the market and build off of that is all you need when it comes to the foundation and just making sense of everything. Because this daily is saying the same thing that the 4 hour said. The only thing I would use on a daily is if a model is present off of this liquidity sweep, which would be this imbalance here. That became an inversion. And then right after that, you had this. So basically, this could be where price can potentially fail to go to the downside and then continue up. So I could look at this as a 4 hour initial stop loss. There. Boom. And then now that I have that level is boom. We go ahead and put that in there. Lock that down. Keep that on the 4-hour. Put that in the 4-hour folder. Boom. So I see that I don't need to mark up the inversion confirmation because I'm with this initial stop loss here. I'm already telling myself that this is confirmation already. So the farthest I want to go down right now and see price draw down to is 268. So from there, basically at 250 range off that quarter point, and see from that quarter point can we push up to the upside. And then let's see the previous week's low and high. So let's go 60-minute. And then we had last week's. So here. And this here was last week's, previous weeks before that low there. And then the high was here. So we're just still in this range here from that high to this low. And then this range is a premium inside of that range. So if we're pushing down, that makes sense because this is premium price. But we took out that low, so we're going to have that continuation, or price is going to push back up. But we see both opportunities now. It's just depending on how time plays out, and then build off of that. So now that we have that, and then you look at price. Let's look at price now. Here. And we have our age range here. So we see that Monday's price action with the holiday, we took our Asian range low. We pushed up, and then we got into the midpoint of the age range, which is also right at the low of the daily consolidation. We pushed back to the downside. So with that pushback down, I'm looking to see how price is going to bounce. Not off of this midpoint. I want to measure this one first. If the body broke below this midpoint, then I'll use that one. So here to here. And we just barely broke it. So I'll keep that one on there. So now I'll look at this one as well. So basically 400. And see how price plays off of these two levels. So make this white. Daily wick. MP. And this is going to be I got a daily wick. Swing low. This is the same thing. Daily wick. Swing low. MP. So now get these two levels of 428, 400. It's 28 points off. So I'll just use this one. 28-point difference. So it's not a big difference. So I'll use this midpoint of this one because it's just the lowest one. But if this body would have stopped right at it, then I want to use this one instead, but still having this one as a reference. But this is what I'm using here. So now what do we have is a foundation on what can possibly happen based off what we're seeing. and we build off of that. So there's no reason to go into the market blindsided because we're looking for potential opportunities based off what the market is giving us. So let's go kill it tomorrow and see what the market gives us.